Hello guys, this is binaryoptions.net.au and we are continuing our series here with or the small or the medium educational series here on how to trade binary options based on different patterns and shapes that are forming on the currency markets. And of course, it is now time to, like mentioned earlier, to show you how to trade the all-important 61.8% level. Now, the 61.8 level is the golden ratio in terms of Fibonacci, in the sense that this is the most important retracement level that is considered when trading or when doing technical analysis, because we are looking at three different possibilities. First of all, it is being looked for by traders when they are searching for the all-important third wave. You know, the wave that should advance more than 161.8 based on the previous wave. Second of all, the 61.8 retracement, or the golden ratio, makes the difference between a zigzag and a flat. And third, the 61.8 actually allows one to have an educated guess regarding the end of a zigzag, or at least to make the difference between a truncated zigzag and a normal one. And therefore, the 61.8 is extremely important based on the reasons above. Now, the first situation or the first instance in these four recordings that I would like to have based on the 61.8 comes after a five-way structure. Now imagine that you have a five-way structure. Let's take a polyline here, and according to any theory or let's say book material, a five-way structure goes something like this: 1, 2, 3, 4, and 5. And let's say that this is your first wave, so the five-way structure with the first wave to the upside, and now you are looking for a retracement level. Now there is a well-known fact that the retracement level, or the B wave, should come between the 50% and 61.8. Most of the pendings or most of the orders will be around the 61.8 level. What does it mean around the 61.8? Because this is important because of the fact that it is extremely, let's say, tricky. It is tricky to find the exact top or the bottom of a specific wave. For example, if the previous move ends with a contracting triangle of a lower degree, then the 61.8 or the Fibonacci retracement should be drawn by the end of the triangle, not from the highs of the triangle, like you will see on this recording. So on such a move with 1, 2, 3, 4, 5 to the upside, you are looking for an A, B, and C to retrace into the 50% and 61.8 area, and that would be the move that, or the pattern that appears in all the textbook materials to be found over the internet. So let's say that this is the first wave that we are looking, all right, and then we have a second wave to the downside, and of course a third wave to the upside, 1, 2, 3. We are looking for a fourth wave here, and of course a fifth one to the upside, 1, 2, 3, 4, 5. And then, like any impulsive move, it should be corrected. A five-way structure to the upside should be corrected with A, B, C. But in our case, with the 61.8 retracement level, or with the golden ratio, we should look for this ABC to come, or to retrace, or to fall into the 50% and 61.8 retracement. Now, how can we determine that? Well, the first thing to do is to take a Fibonacci retracement offered by any trading platform, this one being the JForex, and from the lows and to the highs, we are looking for the 61.8 retracement. So let's take it from here, Fibonacci retracement from the lows and to the highs in the fifth wave, and you're looking for 61.8 or 50 to 61.8. This is the area to look for when you're looking for a third wave of a bigger degree. Why a third wave? Because a five-way structure to the upside, like we mentioned here, should be labeled a first wave of an even bigger degree. Let's make it of a different color. let's make it like this, and 24, let's say red, and something like that. So this to be the first wave of Omega degree, the retracement into the golden ratio to be the 61.8 ratio to be the second degree. It is not mandatory again to come exactly by the 61.8 unless you know where exactly the first wave ended, and then to look for a 5-wave structure to the upside for the third wave to come. So this should be the outcome of this pattern, to come like this, a strong move, and this is the holy grail, if I may say so, that the majority of traders is looking in trading. However, based on my experience, I would say that this is rarely happen exactly in this form. This is just a textbook material. Now, this is a 1-hour chart on the euro dollar. It is somehow recent, as if you look on the right side of the chart, price ended last Friday around these levels. So, what would be the structure with 5 ways to the upside and 3 ways to the downside here? Well, it is most likely the previous move here, and the previous move here to be this one here, from these highs to these lows, like this. Okay, the other way around, sorry for that, let me delete it. Like this, and we should look for the 50% 61.8 retracement from the lows to the highs, and therefore this would be, as you can see, this is our 61.8 ratio. Again, it should not be looked as exactly by the peak. This is the area where not necessarily that we are looking to go long, but we don't want to be short anymore into this area, as this would be most likely bought aggressively by late bulls or late buyers into the previous move. So this is no area to be short, but this is an area to be long. What do we expect after the 61.8 to come after an impulsive move? So most likely in our scenario here, this will be the first wave. So this will be the first wave. Then an ABC in the form of an irregular flat for the second wave to come into the 61.8. And then, of course, a third wave to come, or this move to come to the upside that everybody's looking. 5-wave structure to the upside, corrected by 3 waves down into the 61.8, and then another move to the upside for the potential third wave to come. This is one way to treat the 61.8 retracement, but it is not the only one. How about looking at a possible zigzag or the retracement between a flat and a zigzag? Let's see that on the next recording, so stay tuned please here. Remember, this is binaryoptions.net.au, and all these analyses and projects are being offered by our sponsor here, Lioneye.